Okay, we're looking at the Dow coming into the session, and if you're new to what it is that we do at ATS, in our research lab, at the beginning of every session, we release an opening outlook, and then we later release a market outlook. These outlooks give you context, give you the ability to leverage our quantitative and machine learning models to have a mathematical edge in making efficient trading decisions. So coming into this session, in our market outlook, which we release at 10:40 Eastern time every day, we had a long institutional bias. This just means that our models were forecasting that institutions would be net buyers of the Dow. So we do see in our opening period, which we've sort of annotated by these green vertical bars here, this is our opening period. We expected a long institutional bias, which makes sense. We are an hour away from the FOMC announcement, and if you believe that the Fed is going to cut rates, then maybe you buy equities. That makes sense. But what's interesting about this is that in our opening outlook, our opening range model forecasted 139 point range for the open. So this area right here is our open. We significantly exceeded that. But what stands out is that in our opening outlook, our opening liquidity models forecasted a little less than 25,000 lots to be traded in this opening session. So 24,700 lots. That is significantly greater than the 5-day moving average of 19,552 lots. We actually, in this area, we actually only traded 17,755 lots. What does that tell you going into the FOMC? So we get this greater than expected opening range, but we made this opening range on significantly less volume, not just less volume relative to our forecast, which was roughly 25,000 lots, but less volume relative to the 5-day moving average and significantly less volume relative to the 20-day moving average. This is very useful information, and we look at our volatility and liquidity models. We can see where we have these spikes in volatility, where we have some spikes, increases in liquidity. But for the most part, look at our liquidity. It's been, dropping consistently and pretty measured for the bulk of the session. Again, this is to be expected ahead of the FOMC. But one thing that we would be looking for is, how does this market respond as soon as this news comes out? Because this move, you really can't trust it if it's made on lower volume.